A lot of people have their homes insured to the market value, which is something you want to avoid. Replacement cost is where you want to have your home insured. If in the event of a total loss, your house burns down, gets leveled by a tornado or something else, market value takes into consideration homes around your house, the neighborhood, where it's at, the overall housing market. Replacement cost is strictly what it takes to rebuild your house after the event of total loss. It takes into consideration materials and quality of craftsmanship, cost of permits and fees and overhead, everything it's going to take to rebuild your house. Market value fluctuates, it goes up and down, it's more volatile. The replacement cost, I mean, of course things change, prices of material goes up. The customer always thinks when they hear a good appraisal value that's the number that we need, and really it is taken into consideration at some of the companies, the market value of the house, but for the most part it's replacement cost that is key. I had a woman today, she called me up, she wanted home and auto quotes. I started asking her just, when was your house built? And she jumped right into it saying, oh, I just had it assessed, it's worth $300,000. My current policy says it's $230,000. And just from looking at it and just the base information that I got from my quote sheet, I can guarantee that she's underinsured right now. Replacement cost should probably be closer to $500,000. Replacement cost, it differs from new construction too. First of all, you need to remove the debris from the old house. That can easily cost tens of thousands of dollars. You also have to work around the existing foundation, utility lines, power lines, septic fields. So all that increases the cost. So here at Hartland Insurance, we take great pride in digging deep and asking all the questions that it would take to get an accurate replacement cost. We'd be more than willing and more than happy to go over your home's replacement cost and get an accurate one for you.